Hello and welcome to the second episode of the Milk and Honey Daily DeFi Chat. I'm Invy, one of the founders of Milk and Honey Club, joined again today by Xavier, one of our other OG founders. Today we'll be talking about the slight recovery the market took, as well as go into some options that you can take during the next down market trend. It's kind of where we left off yesterday in our episode. We're just going to continue over here. I think the best practice we can have here is kind of just go over what farming is, what liquidity providing is, what staking is, what mining is, etc. across all the chains. Give people a little ground base to work with here. It's a lot. Some of them are more profitable than others in down market trends. Some of them are less profitable than others in down market trends. So we're going to go over my personal strategy. I think Xavier's going to go over his, and then we'll kind of go into a little bit of what we're doing as far as kind of in the similar lane here. We're myself and Xavier. We have a project we just launched, and we'll talk about it a little bit too. So, just to get started, I'll go into the differences. I believe it'd help people out in regards to farming, what that is, what staking is, as well as what mining is. And mining's kind of the newer phenomena that popped up in the past 6 months. Staking's been around for a while, and then I think liquidity pool farming came out after, and now it looks like it's heading towards miners. So
It's very
I'll hand it
interesting,
off.
the mining.
Yeah, I was actually just
When
about to hand
crypto
it
was
off to
first
you.
new, with Bitcoin mining and everything, the upfront cost and the monthly cost to keep it operational were just it's totally out of reach for 99.99% of people out there. But we're seeing like the market is evolving now. So mining is there's opportunities out there for really anyone to get involved in a mining operation. So it's very exciting.
Yeah, and what these are too. So you guys may have heard of mining, like how it was when people were mining Bitcoin. They still are. They're a lot bigger operations nowadays than they were back then. In Ethereum, when you hear these people mining these coins back then, they had GPUs that they overclocked, meaning that they bought a graphics card, GPU graphics processing unit. I think it was like the TI 1080 was the hot one back in the day. You could get your hands on those. You basically flash the BIOS, you overclock it, and then you have it start mining. So it's an actual physical machine that is plugged into the wall, attached, connected to the internet, drawing power from your house, and people had to balance that whole. Okay, what's my electric bill versus what I get from mining, whether I'm mining Bitcoin or Ethereum, and that was kind of the game. I want to say from like 2015 to maybe 2018. Obviously, it's still going on now. It's just not as predominant because there are other forms of quote unquote miners that are out in some of these DeFi chains, specifically Kronos and BSC. We're seeing a lot of these pop up. They don't work exactly like the miners back in 2017. The physical hardware, you got to kind of be on top of your stuff when it comes to programming it. You got to watch a lot of tutorials. You got to keep up with it. These are a lot more
You got to
passive.
keep upgrading too, because as soon as you
Exactly.
open
Yeah,
a
you got to keep
GPU, the market
upgrading.
was spitting out another one, brand new one.
Exactly. And you got to deal with energy costs going up. So it was a game, and people made money playing it, especially if they decided to hold on to what they mined. So there's a lot of people who were extremely profitable from it. Nowadays, though, if you're living in like Europe and you're just a normal guy, 9 to 5 or whatever, I don't think you can actually make money mining if you had the equipment. The cost of energy exceeds the current price, I believe, in what you'd be able to mine in regards to like a daily or monthly thing. So because of that, I think we're seeing these like new quote unquote miner solutions pop up. To be more specific, it's called rewards pool mining, and I'll actually have Xavier get into it because he's developed one of these before, so I think he's best to talk about it.
Yeah, so the main difference between a rewards pool miner and say Bitcoin or Ethereum mining is that with Bitcoin, for example, you physically have to have the hardware. You have to, confirm the transactions on the blockchain. Once you mine a block, you earn the reward, et cetera, et cetera. I'm sure everyone's familiar with that. But the new phenomenon here with the rewards pool mining is essentially you're providing liquidity into the pool, into a contract, and in return you're receiving miners. Now these miners, they can be called really anything depending on the project. So um we could say they're called milk miners, and you know we'll get into why I use that term later too. And what happens is the money is pooled together into the contract, and depending on the project, the developers can go out and kind of invest that money. Maybe they invest it in staking, maybe they invest it in actually mining, and then they try to produce revenue that goes back into the pool. But anyway, your miners, you receive the miners. So let's say you have 1,000 milk miners, you put one BNB in. So those miners are going to work to mine you rewards 24/7, 365 from the contract. So, for example, let's say you earn 10% a day. So you're mining 10% of your investment back from the pool each day. So essentially, you are still mining, you're just mining from a contract that's led by a project that could be doing, real utilization and real investments that could revolve even around actually doing real mining operations. It just makes it more attainable and accessible to the average person out there. And like you said, like for everyone out in Europe right now, what are you going to do unless you have millions of dollars and you have 20 hours a day for the next 3 months to baby your whole mining rig and just hope the market bounces back in a big way? What are you going to do? There's no money for you in mining. So there's just so much opportunity for people out there to get involved in these miner reward pools. And I'll let you continue on with this.
Yeah, yeah. No, no, no. You explained it perfectly. I just actually want to go over what you said because I think if people can get this concept, it'll really help them understand what
Yeah,
this
and
whole
like I said,
minor
we'll break
phenomenon
it
is.
down even more. And
Yeah,
I use that term milk miners in there, and it all makes sense later on when we get talking
yeah,
about that. But yeah, anything
absolutely.
you want to break down more, we can go back and forth on that here.
No, I really think what you said, where instead of you're mining from the blockchain itself, validating rather what you're doing over here with the BNB rewards pools, you're mining from a smart contract. So you're not mining from you're not doing validations on a chain to get reward. What you're doing is you're mining out of a rewards pool. And obviously, you want that rewards pool to grow because the quicker it grows, obviously, it sustains the rewards. And that's where it breaks down to what Xavier was saying is you got to find dev teams that you trust and have a plan. Because if there's not a way, or they're not searching for a way, or they don't have a way already established to continue to feed into that, or, the public, it gets big, they continue to feed into it. Eventually, because you're not mining on a blockchain, you're mining on a smart contract. We know the blockchain's not going to go down. We've all seen smart contracts implode. So that's the only thing I'd like to add as far as risk differences between traditional mining and what we're calling rewards pool mining right now. The mechanisms are very similar. As far as you as a user, I'm sure you're after the same thing. Everyone who was doing physical mining for years and years was after passive income. That's what they wanted. They
Hmm.
wanted to put in $200 and get 300 out and make 100 extra a month. Over here, it's the same thing. People want to put one BNB in. They want to see their ROI as soon as possible, and then be able to pull rewards from that contract once a week, once every 4 days, once every 2 weeks, whatever they feel comfortable with in a passive sense. So even though the physical mining died, for the most part, again, I'm not saying people aren't doing it. There's massive mining operations going on. Some governments have mining operations going on using geothermal power. So I'm not saying you can't make money with it. I'm saying it's not as easy, and you got to have a lot more money to get started with physical mining So that's why we see this. People always want passive income. Just because it got harder with physical mining doesn't mean those people aren't going to be looking for solutions. That's why we're seeing this whole rewards pool miner phenomena pop up. And it's extremely interesting to me because I see the way they're being attended to and controlled now, and I'm speaking generally here. It doesn't seem as though most developers who I see with these, again, it's a new phenomena, miners come out, quite have a outlook for longevity, let alone stability. And I think it breaks down to, again, unfortunately, they might not understand the whole mechanics of it and might not understand DeFi well. So it's not the hardest thing in the world to do Solidity, put up a smart contract, etc. The hard part comes in the dev team carrying through on their promises, of course, and continuing to grow that total value locked. So that's what we're looking for in miners. Like when I jump in miners, that's what I'm looking for. Uh, on the projects I'm involved with that are miners, that's what I try to employ. It
And
does come down to a lot of the same stuff, that token dev teams come down to. It relies on them, so you got to find the good ones.
exactly. And there is one key word that I'll bring up that you gotta look for in any miner you even want to consider, and that is a renounced contract. You have to make sure the contract is renounced. Basically, what a renounced contract means, the contract has been fully renounced by the dev team, so they can't alter it, they can't change it, they can't rug it. It's basically, that your money, your investment is going to be safe from any kind of rug pull, because the contract can't be changed. The contract will always be working, always paying out rewards on the BSC chain. So you got to make sure, the key word here is make sure it has a renounced contract.
Yeah, and if you're new to mining, renouncing your contract is basically like locking your liquidity if you're like a token. So when they renounce their contract, it's making so they can't touch that total value locked in the liquidity for that contract. When you lock, like do a liquidity locker, like DX or something on BSC, it's the same thing. It's making it so for X amount of time they can't drain that liquidity. It's no different. You don't want, it's kind of odd though, because in tokens you don't want to see the contract renounced. I know there was like a popular period July of last year where it was the hottest thing to do was if you had a token, you renounce your contract. Issue is with tokens, you might need to make a change in the future. What if you want to lower your tax in the future? You
Now,
get so
yeah,
much
you're not
volume
really
going through.
looking at the long term prospects of
Exactly.
the
So with a
project at that
miner, when
point.
you hear renounced contract, it's nothing to be scared of. The only thing they're renouncing is their ability to drain that total value locked, aka the liquidity within the smart contract. So with miners, just to reiterate, renouncing the contract is akin to locking the liquidity for tokens. It's not really the same as if a token were to renounce their contract. That's a silly decision. If you see it on miners, a renounced contract, that it's safe.
And also to touch base on this too, because a lot of listeners might have this question right now. Basically, well, if the dev team, if they can't touch the contract, the total value locked, then how are they going to use the funds basically to set up revenue streams or grow the
Yeah,
pool, etc.?
good question.
That comes into play by a 3%. It can be anywhere. It can be one, two, three, four, five. You're gonna see numbers all the way from 1 to 10, basically. It's a dev fee. So every transaction that occurs within the miner rewards pool, the devs would collect a 3% fee. And that 3% fee, I'm just using 3% as an example. Like I said, you're gonna see a number from 1 to 10, etc. They use those funds to then perform investments, grow the assets out, and then over time, those revenue streams are going to grow and grow and grow and grow. So that 3% is really going to provide, the project goal is probably going to be to provide revenue streams that forever, add value back into the contract. And then that's how the community really, it's just going to keep growing. It's going to be wildfire.
Yeah, You nailed it there. And I just want to say, Xavier, real quick, if you wouldn't mind getting a little bit closer to your microphone,
Okay.
just at the end of that sentence, it was kind of drifting a little bit here. And guys,
Yeah, let me
we're
take that.
gonna
I'll take that phone case off again.
yeah,
Yeah.
guys, we're gonna get this uh rocking a little bit smoother too. Like I realized yesterday the audio was in mono. I messed up. I think it was something. I'm not like the best editor ever. It's something newish to me, so bear with me as I
We're
get through
learning
this.
as we go.
Yeah,
Yeah.
we're
I'm
learning.
working on getting a whole, studio set up here.
There you go. Yeah, yeah.
It's gonna be a little work in progress for right now.
I got
I know we're busy. We got a million things to do all day long, but we'll get it done. We'll get it going.
yeah, we'll make it look a little nicer. However, I think the people who are listening to this now, I just want to reiterate, if you didn't hear in the first episode yesterday, our whole deal is we're not trying to be like a good looking like YouTube girl or guy that gets on there and does like a review of a project. That's not what we want to do. We got our ears to the streets. We're involved in too many projects to really care about doing reviews of specific projects. So again, this is kind of going to be your line to what's going on the street. And when I say the street, I mean the DeFi world, the Telegrams, the Discords, the Twitter DMs, all these guys that you probably are in their call rooms or you might follow them. We talk to a lot of them, so we thought it would be cool. We're kind of sick of seeing like, I hate to say it, Xavier, but like a pretty boy or whatever, or like like a pretty girl do a little YouTube video, and they're really good at editing. They got the neon lights in the background. They got their
Yeah.
makeup on. It looks great, but they don't have any fucking clue what they're talking about.
And then it
They got
winds up they're
picks.
promoting a rug. Everyone gets screwed
Yeah,
over. It's just we get it. She's got a pretty face, like etc. It's just like what really matters, what we really believe is like important going forward is just like the truth and facts, information that's going to lead you to make smarter, wiser decisions. So, I mean, the whole goal here is to make sure you survive another day. I mean, it's a rough world out there right now in crypto. You got rugs going on, you got the market going crazy. I mean, I know you'll get into what you noticed with the liquidity issue, which could be the main cause of the current dip we're having. But it's it's
yeah,
it's rough out there, and it's just sad that people keep trying to use these same tricks or tactics over and over again. And it winds up being like you said, like some chick out there who thinks, oh cool, I'll talk about this, yada yada, and then you know what? People are out like $1 million. They rug pulled it. It's
yeah,
sad.
yeah.
It's
I mean,
crazy, and it's
it.
just like we see it, we know it's happening, and we want to finally have like a voice here for the average Joe out there to be like, oh, wait a second, I heard Imvi and Xavier talking about that. Let me take a step back and do some more research on it, and then you might see, oh, okay, yeah, I see this guy is in this call room I'm in. He kind of has a pattern of this behavior, etc.
Yeah, and guys, like we said in the last episode, I'll just reiterate it again because I'm sure we're just going to get new users as we do this. But myself and Xavier came from traditional financial markets. We see the same shit over there. Nothing surprises us over here. It's just on a different scale, a more global, international scale. But the same stuff that was being done in traditional markets is being done over here. And I'm speaking in regards to marketing and advertising. You don't think that they had you can go on and find a million stock girl accounts, just as many crypto girl accounts. You'll find stock girl accounts, stock girl YouTubes, etc., etc. It's the same thing. you know so just be careful when you're out there, especially right now when you have, it seems like, institutions. I'll actually go into what you were mentioning prior, Xavier. It seems like institutions, just now we might be seeing some of the big boys get into this stuff on a different level. Not just a invest, close their eyes, hope they make a shitload by 20,000 Bitcoin, close their eyes. 10 years they hope it's worth 200K a Bitcoin. Not that type of investment. We're actually seeing some active investing out of the big boys, which is interesting to see in crypto because we haven't really seen that before. We've heard of like JP Morgan wanting to buy Bitcoin. and this and that, but we've never seen active trading, I guess you could say, or quick swing positions before. So I
Yeah.
think we're actually going to start seeing that. I I always wonder, and there is no rhyme or reason to it when you get down to it. But I always wonder when we see a crash like we did the past 48 hours, what caused it? Sometimes there's no rhyme or reason. But I was looking, and I'm not saying this is a definitive reason, but I do believe it added to the chaos, or maybe sparked the chaos. Is if you look into UST, Terra, it's hot right now. It's what everyone's talking about. They kind of got into a liquidity problem, and the way it works, without going into massive amounts of details, is they have it set up where if they do have a liquidity issue with their pegged stable, what's going to happen is they sell Bitcoin to try and keep that price tethered to $1, tethered to the price of the US dollar, UST. So what we saw was them algorithmically forced to unload a massive amount of Bitcoin over the course of 48 hours. And I thought it was weird because I was watching the chart. And usually, if you're watching like hourly charts, you see some sort of recovery. You don't really see like 25% down and then that's it.
Just an absolute onslaught of like 10 Bitcoin, 30 Bitcoin, 25
Yeah.
Bitcoin were hitting the bid, you know?
Yeah. So I'm not really. It's kind of like rumorville out there right now. So I can say I'll tell you what I know as rumors. These probably aren't facts. They probably will be super super wrong. Again, we're talking about something that happened within the last 24 hours, so I don't think anybody has it right. That being said, it does look like there was some interesting stuff going on with Citadel. I'm not as read up on it as I should be, so I won't speak in detail. But what I did see was, money from Citadel switching hands, trying to make stuff happen. That money in specific was used or utilized or sold or something along those lines that caused the algorithm to go, okay, we need to try and stabilize back to $1.
Mm.
How are we going to do that? Well, we got to sell a shitload of Bitcoin. And that's what we saw. So is this the first time ever where we're seeing Citadel do some like hostile shit over in the general crypto market? They're experts
Well,
at it in equities.
if you don't mind me jumping in here,
No, please, please.
I've always wondered, with the crypto markets, there's really no like oversight at all or regulations in, these like Citadel and these other big banks, big businesses, right? They're just so used to having, like the traditional financial markets, bonds, stocks. It's just so heavily watched, regulated, scrutinized that they can't. We see them because we're experienced day traders and stuff too. We see them trying to, you know, force trades, force the market to go up or down. I'm just wondering what happens when they finally move over to crypto and like Citadel recently over the past 48 hours kind of figures out, hey, there's going to be nobody to stop me or say like, we have to pay a fine for causing mayhem in the market for our financial gain. I'm just wondering what's going to happen when we see these big banks almost competing with each other. Hey, if we tank Bitcoin, load up here, sell it on the pop, or make Bitcoin pop, sell it off, buy the dip that happens next. What's going to happen in the future in regards to that, you know?
Yeah, that's actually, you know what? I can't answer the question honestly, but on a more hopeful standpoint, and actually, this is a pretty good transition into the benefits of like liquidity farming as well as staking, because I think it's an inevitability as you speak of it, them jumping in. Whether it's JP Morgan Chase first, Wells Fargo first, whoever it is
Once
first,
one of them does, the
it's
the
over.
dominoes will fall.
Exactly.
Yeah.
Yeah, exactly. Every time I go into Chase, I go, when are you guys going to start accepting Bitcoin or have it? And they go, oh, we don't know. And I always say, whoever does it first, they win. So I don't know
That's when
why
they
you
say,
guys aren't.
"Sir, yeah, you're gonna have to leave now."
Yeah, dude, they suck. I've had just so you guys know, I've had Bank of America, I've had Wells Fargo, I've had Chase, I've had Citibank, I've had PayPal, I've done all these banks. I've literally done them all. I've had businesses, LLCs with these banks too. It's all trash. They're all the same. They're terrible. They hate you. I'm convinced. Uh, they don't care at all
There is
about you.
zero difference, zero difference between any of these banks. I've been with
Yeah,
all of them too. They pay the exact same interest rate, which is what, like, you can
point
expect a few
zero
pennies a year.
six
You know,
one percent.
it's the same thing with a different name and a different logo. It's pretty, it's pretty sad to be honest, but that's the power of DeFi. The future. It's exciting.
Yeah, and so just to get back on point with what I was going to say, because I can go on a tangent of how I hate banks for like
Yeah,
10
yeah. We'll
hours.
save
So I
that for
won't.
another episode.
Yeah, I won't. We'll do like a whole like 10-hour episode about why
Yeah,
banks are
maybe on
terrible and
Fridays or
useless.
something we'll just break it
Yeah,
down.
yeah. I gotta have a drink if we're doing that one to calm myself down because I'll start screaming. But what I was saying was when these big boys do get into the game, uh, again, whether whoever it may be first, the next one will hop in, the next one will hop in, the next one will hop in. Once everybody's in the game and they're full fledged into it, what do you think is going to happen specifically to the volume in the market? Do you think there's going to be more transactional volume or less transactional volume? I would bet almost anything that there will be more transactional volume having big money involved. So
Hmm.
that kind of leads me to where we left off on the last episode is the options you can take now that I do and will probably do till the day I die. Granted, they're still around. And they are especially beneficial during down market trends for the exact same reason I just described. Yes, BNB can fall 20%, but how much volume went through BNB to make that happen? We're talking hundreds and hundreds and hundreds of millions of dollars. So if you want to take some of your money, maybe if you work a 9 to 5, I always pitch this as an option for people who work day jobs, even minimum wage. Take $50, take $25, take whatever it is, and put it instead of putting it into your savings account or putting it into your 401k or putting it into these other options your employer might give you. Consider putting it into liquidity farming or
Hmm.
staking. And what that is I'll go through staking first. It's you own a token or coin, and there's a provider that allows you to stake it, meaning lock it up. You can't access it. Sometimes you can unlock at any period. Sometimes it's a 1 month lock. Sometimes it's a 3 month lock, etc. You're just going to have to see which staking platform best fits
Think of
you.
it
For
as like a
me,
CD at your traditional bank.
yeah. For me, what best fits me is platforms that allow me to access my money instantly. You know, I don't want to have to lock my stuff up for 30 days. You could get better rates, and that could be for you. I'm an active trader though, so I personally need access to my money. You could be in a different situation though. You do get better rates if you do decide to lock for 30 days, 60 days, 90 days, a year, up to 5 years. Some of these platforms have, but you earn a percent on what you stake. So let's take, I'll call it meme coin one. So let's take meme coin one, and let's say it's trading at 1 cent, and you have 10,000 shares, or I'm sorry, 10,000 tokens or coins rather. Uh, that value, then you would lock up and you would earn a set rate on that. So generally, it's a hovering around. And I know if you're not in DeFi, your heart's going to drop when I say this, but generally, right now, as it stands, the rates are hovering around for meme token staking type stuff or non-stable type tokens. They're hovering around 50 to 60% APY, meaning that if you put $1,000 in at the end of the year, if you don't compound once, you're going to get $600 back. I know it sounds a little bit too good to be true. There are some caveats to this. Obviously, if the meme token or token you're staking drops 60% in price and you earn 60% more of that token over the course of a year, nothing really happened. It wasn't beneficial to you. You own 60% more of something that's down 60%. Who cares? You're in the same deal. So it's still about picking the right tokens that you believe will have success over time. And then taking the risk of either locking it up to earn more or just staking and hoping, it earns and accessing the money if you need when you need it. The other option for you, again, I really recommend this to guys who are doing 9 to 5s. It's it's something, I worked a 9 to 5 for, let's see, I mean, like 8 years, maybe 9 years, maybe even 10, if you consider like early work. I've been working, selling phones, selling cars, doing customer support over the phone, doing all this. I wish somebody told me when I was doing
Mm,
this that there was an option like this, because again, it doesn't take that much money. If you make 500 a week, how much is going to Social Security?
yeah.
You know, go look
Which
at your check.
I
Or
hate to
how much
say
is
it.
going to your 401k. More
Yeah.
importantly, that's something that you can control. So if you have $100 or $50 out of every paycheck going into a 401k, you need to sit down and do the math. Okay, $50 every check over a year. I get paid bi-weekly. How much money is that? Is my employer doubling it? Oh, they are doubling it. Best case scenario. How much money is that? And then what return are you guaranteed? This is the key word. What return are you guaranteed from your 401k provider when you decide, hey, I want my money? You're not guaranteed anything. You're not guaranteed one thing. You're
Not a
guaranteed an
penny.
employer matching, etc., but you're not guaranteed a thing. And if you want access to that money, get ready to pay taxes out the ass, penalties out the ass. Get ready to get destroyed.
And let's
So,
say you don't even touch it, until you're
yeah,
in the retirement age, which who knows? Pretty soon they keep pushing it back. You might have to be in your 70s to not pay a penalty, to start collecting from it. Well, let's say God bless you, reach the age of 70 and you can withdraw your retirement funds. Who's to say at that point in time if the US dollar is even going to be worth anything with the rate of inflation that's going on right now and stuff that we're noticing between the two of us here in the global economy, it's it's something you should really sit down and have a talk with as a family,
yeah,
as an individual, whatever you got going on in your life. It's very important. Like you need to be educated on this.
yeah. And I'm going to hop on my soapbox right here for a minute. Guys, at the end of the day, if your 401k, give me 1 second. Sorry, I had the dog barking in the background. I didn't want everyone to hear that. But if at the end of the day, you're 30 years old right now, you're going to be working the next 35 years. Your employer's matching double. You go, I'm never going to touch it, guys. First of all, it's not guaranteed. There's zero guarantee from that. Zero. And the other thing is, a massive multinational corporation is in control of your money. So if they do something that you don't like, tough shit. That's not your money. That's not your money till you're 65. That's their money. They're
We're
using
older.
your money, making more with it, and giving you a little bit back. That's how that game works. So if you're okay with saying, hey, my retirement, I'm putting into somebody else's hands, that's what you're doing. And you need to realize you're doing this. Regardless of what everyone else says, you're putting your retirement in somebody else's hands. This is not what happens over with DeFi. You control everything. No, your retirement is not in somebody's hands. And that alone should be enough for people to at least give DeFi a look as a retirement option.
Mm,
Because
mm.
I'm very, very worried that in the next 30 years, people who stack their 401k, they're going to be fucked. Today, think about
Well,
it.
there's two
Open
issues
your
too with that.
401k today. If you've been
Yeah.
working for 20 years, tell me how much money you're down. And then tell me, guarantee me that you won't be down more than that when you're ready to retire. You can't. That's the problem.
Mm. And there's two issues with giving your money to somebody else that they're dangling that carrot above your head for retirement. They don't have any risk. It's your money. So if shit hits the fan, it's like, hey, I'm still getting paid. I manage your money, right? But sorry, there's nothing left. The other issue is how do you know how much they're making off your hard earned dollars that you can't touch? And if you do touch it, they're just going to take half of it anyway. The problem is people can see like the rewards of or how much you could earn. Like you were talking about 50, 60% on some of these meme tokens.
Yeah, yeah, yeah.
And they're like, no, 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 no. Like, my bank, I'm used to seeing a quarter of a percent interest, or if you do a CD, maybe you get up to like a percent or something.
Yeah, it's
It's
just to let you guys
people
know in
don't realize like
America.
these people. How do you know how much they're making off your money? So your retirement account, you give them all this money over your whole lifetime. They don't tell you, hey, we've quadrupled, your money over the past 10 years, but we're only paying you what, a 3% a year, return. So when people move over to DeFi, it's kind of like a wake up call. It's like, wait a second, isn't this what like the banks have been doing the whole time? They've just been, screwing us over. Wouldn't you agree with that?
Yeah, you couldn't have said it better. I mean, the way DeFi works and the way traditional finance works are one in the same, meaning that what somebody considers their savings or their 401k, their retirement, over here it could be the pool you're staking in, or it could be the farm you're providing liquidity to. That's what they're doing with your money, guys. When you give your employer 10% of every check you get and they double it and put it in an account, what do you think's happening with that money? Vanguard is then using it to open either extremely safe long-term positions, depending on what you check, or they're opening extremely high risk. They're putting you into a pool of money of people who designate their money needs to be handled that way. It's absolutely no different than what's happening over in crypto. The only difference is I have a
You're in
smart
control.
contract. Well, I have a smart contract that's immutable. I have a deflating currency I'm working with, and I'm in control. As opposed to over there, we see hyperinflation. A mystery suit businessman is in control. What do you want, guys? You need to
Obviously does
wake up
not
to
care
these
about
things.
you. I mean, how many examples do we need to see of bankers screwing over the average person? Look at the housing market crashes, like great recessions, like debt bubbles. I mean, it's really disgusting.
Yeah, and
And to think that
go.
those people have any thought, care, or concern about like your financial well-being and your future, think again. Like seriously, think
Yeah,
again.
and guys,
Look at the track
understand that.
record.
Yeah, exactly. The tracker. That's exactly what I was going to go into. Understand that in my lifetime, I'm a young guy. I won't say my age, but I've seen two and looking like threes on the horizon financial collapses in my country. You know, I know for a fact that another one's going to happen. I don't know when it's going to happen, but I can guarantee you it's going to happen because the same mechanisms that caused the first two I was alive to see are still in place. They haven't changed anything. It's as bad as it gets out there, guys, in regards to general, trusting. I hate to say it, in regards to government in bed with
Mm.
banks. It's
It's
never
kind
been
of
any
like
worse,
that, like
guys.
the Bush quote there, where it's like, fool me once, shame on you. Fool me twice. You can't get fooled. All
Yeah,
right, cut.
he
I'll
fucks
cut
it
that
up.
one out.
Yeah.
But my bad.
No, 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 no. Bush actually fucked it up.
I
It's
know. Yeah,
fool me.
that's what
Yeah,
I realized that when I said it. I was like, that's wasn't the
yeah,
best
yeah.
example.
No, Bush is the one. Uh, and guys, I just want to give you a story here too that kind of, and then we'll move on. That kind of even reiterates more what I'm speaking of. In 2008, everybody in the United States and Western countries, it had ripple effects around the world. No matter where you're listening from, you'll probably understand or at least know what I'm talking about. 2008 in the US, there was a massive housing collapse, which everybody knows. Nobody actually owns a house in the US. It's all debt based. Not many people have half of their house paid off, let alone own their house, maybe like a couple percentage or whatever. It ain't how it is. So,
Not a
guess
lot.
what?
Not a lot.
Yeah, guess what? It collapsed. Big shocker. And the taxpayers, me, you, every other US citizen, had to bail out the big banks because they were writing loans that they knew themselves would collapse, but provided them profit right away. What did that do? What that did to the economy was implode it, and it put the burden on the taxpayers. Cool. We've seen that before. No big deal. What that did on a personal level to people, a story that I will never, never forget. and it isn't my life, but it's one that really resonates with me, is airline pilots. In 2008, their 401ks, what do you think happened? Imploded. I mean, some of the company's holdings in these pilots' 401ks were like Fannie Mae and Freddie Mac, who aren't even fucking here anymore. You know, Freddie Mac, like it's gone. So whatever was in there in that position was gone. So you had a bunch of 63, 64, 65-year-old pilots who'd been flying since Vietnam, just doing the right thing, ready to get off. They planned, they were told by their financial planners, if they do this with their paycheck every week, you're going to have $1 million in
They'll
your
be in
account.
Hawaii.
Most of them are still flying today because their 401ks imploded. Think about this. Most of those airline pilots who were ready to retire in 2010, 2011 are still forced to fly today because they don't have their retirement money.
You know what's
There's
crazier
no
still?
guarantee with this stuff, guys.
Those institutions that manage their accounts, they're still around. What happened to them? They got bailed out
They got bailed
by
out.
you and I, everyone else in this country. It's just there's so if there's no risk to them because they're just banking on right now. Well, yeah, fuck it. Like last time we got bailed out by the government. Why wouldn't we just cash in as much profit as we can right now? And when the gig is up, yeah, we need a bailout. It's wash,
Exactly.
rinse, repeat, right? It's just it's incredible that those people are still having to fly today, and the institutions that are forcing them basically to still be flying are still around. They pay no penalty for what happened. It's incredible.
Exactly. And guys, just to put this into a little bit more perspective, if if hypothetically, I'm not for forced government bailouts. Don't get me wrong. I think it's the most horrific possible thing you can do to an economy. If a business fails by their own doing, let them fail,
It
please.
fails.
That
Let's
being
move on.
said,
That's how we
exact.
evolve.
Well, this is the problem. If you give money to a failing business, you're taking away an opportunity for a new company. A new
Mm,
company, every
fresh
time a
ideas.
business fails, a new company comes in and fills its place and does a better job. That's how it's been since the beginning of humanity. So when we continue to funnel money into these failing projects, it's stopping the natural progress of a new, better idea being able to come up. So that's one
And
of
you
the
can't
issues.
fight that. You can't fight nature. You can't fight the laws of the universe.
Yeah, but let's
Once
let's
you
just
do, it's never gonna work, and that's the ramifications
exactly
we're seeing. I mean, the government, the people, the elites, they're basically just trying to keep pouring money into the Hindenburg that's going down. I mean, what are you doing? There's no reason why all that money is not going to get the company to be successful again in the future. It's
a
just done.
company isn't successful because of the money flowing through it. That's not because successful companies started with no money flowing through them. So the measure of success can't be the money flowing through because every company started with $0 flowing through and somehow became successful. You can throw money at a problem for days and days and days. It doesn't change the fact the people who caused the problems are still there. It's nothing you
Exactly,
can do.
exactly.
So let's pretend they didn't bail everybody out. Let's pretend they didn't bail everyone out. They said, nope, we're not doing that. What would it look like right now? Well, we wouldn't have most of our banks. We wouldn't have most of our lenders. We wouldn't have most of our auto producers. We wouldn't have most of our airlines, and the industries go on and on and on and on. So that means, these big companies, they would just completely go under, which means the holdings of those companies in your 401k would follow them down to zero, would follow them down to nothing. And by the way, as a shareholder, you're the last to get paid out for bankruptcies. You're the very last. There's $0 that are coming to you as a shareholder of a public company if they file for bankruptcy. The way it goes is Series A, Series B, Series C, so on, so on. That's who's entitled to whatever the bankruptcy court is able to, uh, uh, trying to think of the word, able to,
Recover
accumulate.
from.
Yeah,
Yeah.
exactly. So, if you just take 2008, guys, we're talking not that long ago. We're talking what, 22 years ago or something? What is that? 18? No, no, less.
No, 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 no. That's
Yeah, 15 years ago. About 15, yeah. So like we're talking about stuff that happened in relatively recent history, could happen again, and either you lose a little bit of money and you're forced to work for another 10 years, or you lose it all and you're homeless. That's what you're doing. That's what you're signing up for. If there's another economic collapse, those are your two options.
and that's just we're just talking about the financial part of it too. Maybe one of these Fridays we can get into like every other aspect of like everyday life too that's gonna be affected by this.
Yeah, I think
I know we can go on and on and on
yeah,
about that, but we'll
yeah.
we'll get into
well,
that one of
well,
these Fridays
well,
maybe.
instead of I've been pretty doom and gloom, guys, but this podcast was, now that you know what could happen, and we've described what has happened. I think it's probably a good thing to go into how you can negate some of these what I believe is coming market cataclysms.
It's
A
never a bad
there,
idea to put your future in your own hands. Do
of
your own research,
course,
make your own decisions. It's never a bad idea.
it's very convenient for you to put it into somebody else's hands, but convenience in that sense is laziness. I hate to say it, because if it breaks down to nothing or you're unable to retire, are you going to sit on the phone all day yelling at your portfolio manager, or are you going to be kicking yourself in the ass? You're going to be kicking
Mm-hmm.
yourself in the ass. So I would rather be the one who made the bad decision, so I can actually kick myself in the ass, learn a lesson, get better, than put my whole financial life, my retirement, maybe my kids' college, maybe all this other shit in the hands of somebody you may have never met in person. So again, I'll go into, I know it's doom and gloom, guys, but there's ways to negate it. That's what this is all about.
We'll
My favorite
expand on
way.
this too, probably in tomorrow's episode. I
Yeah,
know,
yeah,
like,
yeah,
we only really touched base on one of the talking points we had, but
yeah.
that's just how passionate we are about this. So I tomorrow we'll probably circle back and explain more about the mining and everything else that we got going on.
Yeah, absolutely. We'll go into detail. I will just leave. I'll let you guys know, because I promised I would. I'll get back into it. My strategy, guys, for navigating the horror that I believe is coming to the general financial market, is take some of your money, take what you can, be disciplined about it, manage your own money, and which, by the way, Google spreadsheets is all you ever need to manage your own money. Throwing that out there. And there's like countless apps. TurboTax does it for you. There's so many. But manage your own
Most of
money.
them you can get for free too.
Exactly. Yeah, there's literally no excuses nowadays. So manage your own money being the biggest. And what does managing your own money look like? You want an ability to earn over time. You want to earn interest over time to increase your bag. You want to have more money when you're 65 than you do now at 30, and you want that money to work for you. Well, DeFi is quite literally designed for that. There's multiple ways to make your money work for you. The way I utilize is specifically liquidity farming, often just called farming, or LP farming. What that is again no different than what the bank's doing with your money. You just basically control it. If I want to throw $1,000 in, they guarantee me. Or let me break down what liquidity pool providing is, just for everybody, because I'm bad. I always assume everybody knows, even though it's like a brand new thing. But
Yeah, we kind of get a step ahead of ourselves.
but liquidity pool farming is very similar to staking. It's you're providing liquidity to the market to execute trades. So if you wanted to say, if you go, hey, a lot of volume goes through Bitcoin and USDT. Cool. Maybe you can buy some. You buy and you have $1,000. What you do is you buy 500 Bitcoin, $500 worth of Bitcoin, and then 500 USDT. And then, depending on what platform you use, I recommend Pancake Swap for BSC. I recommend MMF for Kronos. Depending on what platform you use, you then go in and you make a liquidity pair, meaning that you're providing liquidity to the market for trades within that pair. So if somebody on that exchange trades swaps Bitcoin for USDT or USDT for Bitcoin, you're entitled to a percentage of that transaction and every transaction, even if it wasn't exactly your money used in that, like your specific tokens, you're throwing it into a pool. And depending on your ownership value, it's divvied up proportionally. So you're earning for providing liquidity for transactions, which, by the way, guys, is kind of what banks do.
It's really
So,
no. Think about a
yeah,
savings account. If you go put like $1,000 into a savings account, which the bank will pay you nothing for, what is the bank doing with your money? Well, essentially, they're taking that $1,000 and providing it as liquidity into the, say, the housing market. So they're going to take your $1,000 and go, all right, next person comes in. Here, you want a mortgage? Well, let's just use this $1,000 as collateral and go give somebody else a $15,000 loan that they're going to be collecting. What are they going to make on that? 6, 7%. But when you factor in 6, 7% off, say 15 grand, what does that equal to off those, like the $1,000? The bank could double or triple your $1,000 by basically providing liquidity into another market within the economy. But they're going to pay you nothing, literally pennies. And then what we have
0.061%
over
year.
here in crypto and DeFi is basically you're just being the bank and not letting yourself get ripped off. It's
Yeah,
really no different.
yeah, and guys, this goes back to, if you're thinking about this in a retirement sense, you're not going to spend the money you earn right away. You're going to lock it up for 30 years. So this is why this is such a really cool tool for anybody, honestly, to get into regardless of age, but especially with a retirement focus if you're younger. Take what you throw in your 401k and put it into, liquidity pool farming. Does it mean that, you're not going to be down in value if you put 10k in there? And let's say you do USDT Bitcoin and Bitcoin drops 50%. Yeah, your value is going to be $7,500. You know, tough shit. It sucks. We've dealt with that. You're earning at a lower rate. You're earning on $7,500 instead of 10k. But what helps you during the down market trends and protects you is the fact generally there's massive amounts of volume going through if there's massive dips in the
That's true.
market.
That's really true.
So if there's massive amounts of volume going through, you're the one who's actually essentially providing the liquidity for those transactions. So you're getting your kickback based on volume. Yeah, you're earning on a token or coin that's going down in price. But if you don't plan on selling it till you're 30, you got to ask yourself, is Bitcoin going to be worth more now or is it going to be worth more in 35 years? And if you
Exactly.
believe in your head it's going to be worth more in 35 years, you just hodl through that. You almost start loving the down market trends because of how much volume, because you go on there and you go, yeah, my total value's down, but holy shit, I earned this many Bitcoin. And then all of a sudden Bitcoin recovers and that amount you earned is worth way more. And it's
You're
it's a it's a
essentially you're hedging against the downside.
yes. And
Because let's say the downside, like temporarily, is like, say it slides 10%. Well, you're hedging that loss because you're earning Bitcoin with all the transactions that you have by being in the pool, right?
exactly.
Now,
Yep,
when
exactly.
the when you have another upside event, when we have a bull market, well, now you're maximizing the bull market. So you're minimizing the downside and maximizing the upside. So if you have like a true hodl perspective, if you're sitting there going like 5, 10, 15, 20 years down the road, like, yeah, like Bitcoin is the future, crypto is like the way to go, like, and you see like more utilization and everything in the market, and you think the price is going to be 100K, 150K, whatever, anything more than the current price now, then it just makes sense to do this because you're hedging against the downside, and during the downside you're accumulating uh, at a higher rate of that asset that over the long term you think is going to produce very, very good results. So it makes sense from like a long term investor's perspective to be doing this.
especially from like a passive perspective too. And that's kind of what I want to
Exactly.
stress too, is the fact where I'm speaking specifically of a retirement solution to someone who's a non-crypto expert. That's who I'm talking to with this conversation. Don't think it's complicated or hard in this day and age to get into these things. It couldn't be any easier, actually. It's I
Just
would
listen
argue
to this
that it
podcast daily.
yeah, yeah, I would argue that it takes less time to get these things set up than it would to set up your 401k. Truly. So just consider it, and understand too, guys. This is probably the most important factor of what I'm trying to get across here, is the compounding aspect of this. So your bank, your savings account, your 401k, whatever, go ask them how often they compound. And when I say compound, means take your current earnings and add it to the principal. So now you're earning on the higher principal value. How often do they do that? Do you control when they do that? Can you call them and say, hey, compound me right now? I have 40 bucks in there, compound me right now. They'll laugh at you. They'll go, what are you talking about? We control everything. We own you. But over in DeFi, let's say you earn $40 in a day. You can go and increase your liquidity pool position, meaning you own more of that liquidity. You're providing more liquidity anytime you want. So if you're able to compound your earnings on a daily basis or a weekly basis or even an hourly basis, if you start earning that much, it's got to make sense with transaction fees. But if you're able to compound on a daily basis, it's a non-calculable amount of money you make. This is the thing people don't really understand, is you have control of the factor of compounding with this situation. And all the magic, Warren Buffett said it himself, the magic is in compounding. Hello, test test. I'm sorry, guys.
No, no, I'm sorry. I'm here.
Every time I
I
get
didn't
a
know if you were gonna.
no. Every time I get we're not
I
professional
was
yet. We're
reading
using our
the
phones.
three-way chat.
Oh yeah. But yeah, guys, look into this stuff. And I mean, don't we got a community, we got a Telegram room, we got a Telegram news channel, but we got a Discord room. It's going to be in the description below. If you have questions or you want to like help setting up your wallet or this stuff, and you just want to know, hey, what's a good platform? I'm really into Polygon. Can you recommend a platform? I'm really into Cardano. Can you recommend a site? Let us know.
Both of us
Just
are always
shoot us a
there.
thing. We're always there. We'll answer it. We'll help you set it up. We don't care. We truly want people to realize what's coming, because I think a lot of people are going to get trapped in the coming years. And it's sad because there's never been a time where it's easier to not get trapped. It's never been easier. There's so many solutions out there for someone who knows absolutely nothing, all the way to someone who's a complete expert at it, to make money passively. And it doesn't matter if you're working 40 hours at Starbucks or you're working 40 hours at Raytheon. You're most likely giving a portion of your hard earned time to a no name man in a suit, most likely Vanguard, who, if you look into Vanguard, they're not that great of a track record, guys. Not that good. Riddled
Batting
with
under
bullshit.
100.
Yeah, very bad. Very bad. So you're, again, giving a portion of your hard work accumulated every week to a 401k that you, A, hope will be there, B, hope will sustain the value that you believe will be there by the time you're that age, and C, not just disappear overnight. That's the real problem. Is a 401k can blow the fuck up. No different than like a token getting rugged. I mean, depending on what's in it, depending on who's managing it. I mean, what happens if Vanguard goes under? I'm not saying that's going to happen, but truly, what happens? Your 401k portfolio gets shuffled around. Do you get to choose who it goes to, or does it get sold off to someone else? I don't know these things. I hope I'm never going to have to even remotely try to figure these out because I take my financial longevity into my own hands. My retirement is based on my decisions, and I don't think it should be based on anyone else's decisions.
I couldn't agree more.
Yeah, man, I think we talked shit for like another 30 minutes. Mostly it was
Yeah,
us.
we
That's what
did very
happens.
long today. But
Yeah,
we're
I
gonna
know. We
we'll definitely expand on this tomorrow.
Yeah, I
Circle
think we
back
can.
and go over it.
Yeah, I think we
Rehash
can.
everything we talked about tonight. We'll go over it again tomorrow and just really expand upon everything we're talking about.
I love it. I think, I'm very passionate about this stuff. I think it's like one of the most important things you can recognize right now in this day and age. I think the clock is ticking for people to make the decision to at least do something else with their money, even if it's no DeFi. You got to figure out what to do with your money. If you look at the US dollar, it's printing at a rate that doesn't even make sense.
And there is
We're doing
zero,
40
there's
billion.
absolutely no plan in place
Yeah,
on how
zero
it's going to
plan.
be. That might be
We're doing
the most scary part of it all,
Yeah,
honestly. It's
and we're
just
doing
it's just what let's go print another $1 trillion. What's that going to do?
I think today they just did $40 billion.
Yeah.
And it's like,
Think
how
about what
the
forty
fuck is
billion
that
dollars
possible?
is. Like try
Well,
to
well,
envision $40 billion like on a table,
yeah.
right? In $100 bills. That's
If I
in
have
one day.
$0,
One day.
if I'm negative $32 in my Wells Fargo account, I can't go and spend 40. This is the problem, guys. It breaks down to this concept. It's really this simple: is the US is $33 trillion in debt, somewhere around there. We can't spend a fucking dollar. If this was real life, if the US was you as a person, if you had $33 trillion in debt, could you spend $1? But we're spending 40 billion. This is the problem, guys. It doesn't take a rocket scientist. And don't tell me quantitative easing, all that bullshit.
It,
It doesn't take a rocket scientist, guys.
yeah, we could go on about the whole quantitative easing thing. Every other term they throw around too, but the fact is like where is this money even going? It's not even going to areas that could produce like revenue or produce something to offset what you're printing. It's mortifying.
It's going to
It's
bomb
simple math at this point.
Russians or
I mean,
something.
it's
Yeah.
like one plus one kind of math at this point. That's how obvious they're making it now.
Well, it's so concerning because if I was negative $33 in my account and I tried to go spend
You'll
forty
be getting a
dollars
phone
at the
call every
store,
day from the bank.
yeah, they'd be harassing me. They'd be going, "When are you pay?" They'd be charging me more money every time I tried to. They'd be charging me another $35 overdraft fee. I mean, guys, hold your government to the same standards the bank holds you to. I think that's fair. I think you should hold your government financially to the same standards your bank holds you to. And if that's not happening, you might want to start looking for another solution. And
Fast,
yeah,
very
yeah,
fast.
and fast, yeah. But hopefully, if you're a fan of this podcast, you like it. We're probably going to be going into this type of topic a lot, and I think we're going to stay consistent. So you'll probably be able to follow the fall of Rome with us real time, which could be fun. Definitely prepare for it. But anyway, guys, again, we want to do this every day, so we just hopped on here, talk shit for 30, 45 minutes, and we're going to make it a daily thing. We're going to stay consistent with it. We're going to get these audio problems figured out. We're going to get, Xavier a better mic. I'm going to start doing makeup if I get on video. I don't know. We're going to make it look real nice. And so stick with us here, guys. Again, this was only the second episode of the Milk and Honey Club DeFi Daily Talk. We do hope to see you here again with us tomorrow. I am Envy, and I was here today with Xavier, and we'll be back. We'll be back around 5, 6, 7 p.m. Eastern time tomorrow.
And
Thanks again,
honestly,
guys.
thank you
Go for
so
it.
much for tuning in and listening. It really means the world to us right now because we have a lot of plans in place, and we're really looking to grow a very, very large and disruptive community in the crypto and DeFi space. So, thank you for just being here and listening. That's all we could ask for right now.
Absolutely. Well, on that note, I'm going to end it here, but thanks again, guys, and we'll see you tomorrow.